The Opposing View Podcast. Global Financial Collapse. Is it imminent? Welcome to the Opposing View Podcast, where we explore both sides of the world's most pressing and provocative issues. Each episode, we bring together two experts with sharply contrasting views, guided by facts, reason, and a deep respect for disagreement. Today's topic: global financial collapse. Is it imminent? In light of recent volatility, inflationary surges, record debt levels, and global power shifts, many wonder, are we heading toward a systemic financial breakdown? We've invited two scholars with deep experience in global economic systems. Let's meet them. Introducing the experts. First, joining us from Berlin is Dr. Stefan Krause, a European macroeconomist who specializes in systemic risk, shadow banking, and monetary history. His recent work focuses on fiscal overstretch in modern democracies and historical parallels to pre-crisis economies. And joining from Tokyo is Dr.Minji Takahashi, an East Asian financial anthropologist who studies community resilience and informal economies. She's done extensive fieldwork in post-crash Argentina and Greece and analyzes the socio-behavioral dynamics of financial stress.
Dr. Stefan Krause, let me be very clear. A global financial collapse is not just possible. It's becoming increasingly probable. The primary driver is interconnected sovereign debt. According to IMF data from October 2024, the combined public debt of G20 nations exceeded 98% of global GDP. That's historically unprecedented outside of wartime. The debt servicing costs are rising faster than GDP growth, especially in Italy, Japan, and the United States. The second issue is the private credit market, particularly shadow banking. In 2022, a Bank of England report revealed that over $60 trillion in global shadow banking assets were operating with little to no oversight. These opaque, interdependent structures, think credit default swaps or repo markets, mirror what triggered the 2008 crash, but on a much larger scale. One concrete example. In September 2019, the U.S. repo market froze overnight. The Federal Reserve had to inject over $75 billion in liquidity within 48 hours. That was a warning shot. If that kind of liquidity shortfall hits a globally interconnected system like Europe-Asia cross-border lending, we won't be able to respond fast enough. In essence, the fragility is built into the system. We've designed it to grow, not to absorb shocks.
Dr. Krause paints a picture of a dangerously overstretched system teetering on complex, under-regulated financial instruments. But is collapse inevitable? Or is it simply a myth, recycled every decade? Let's hear from Dr. Takahashi.
I respectfully disagree with the inevitability narrative. While financial stress is real, global systems have adapted in ways we often overlook. Take the case of Iceland in 2008. Their entire banking sector collapsed, but within 3 years, Iceland had returned to stable growth by shifting toward local currencies, capital controls, and community finance. That's not collapse, that's restructuring. More recently, in 2023, the Philippine Central Bank preemptively raised interest rates and imposed macroprudential tools to cool overheating housing markets. The result? A soft landing, not a crash. Yes, shadow banking is risky, but new regulation is catching up. In South Korea, starting in 2024, financial tech firms were brought under real-time regulatory oversight through blockchain auditing tools. A pilot program in Busan tracked loan originations and defaults instantly, reducing default risk by over 40% in test districts. The financial system isn't a monolith. It's evolving. Through localized resiliency, technological accountability, and behavioral adaptability, collapse assumes homogeneity, but the global economy is becoming more modular, not less.
Rebuttals. We now move to the rebuttal segment. Can technological resilience and local adaptation really protect us from a domino effect triggered by massive global debt? Two experts, two futures. On one side, we heard Dr. Krause lay out a sobering analysis: sovereign debt spiraling, shadow banking swelling, and systemic risks that, in his view, resemble the calm before 2008, only now at global scale. His argument paints a world where financial structures are so intertwined, so opaque, that even a minor shock could cascade into collapse. And then we heard Dr. Takahashi, who offers a very different picture, one not of imminent failure, but of adaptation, of systems bending, not breaking. From Iceland's turnaround to Busan's fintech regulation, she points to a world learning in real time, building resilience in the cracks. Both perspectives draw from real data, real cases, yet what they reveal are competing assumptions. Is fragility baked into the system, or is evolution quietly underway? Are we on the edge of a cliff, or in the middle of a transformation? This isn't just a technical disagreement. It's about how we see the future, as something brittle or something flexible, as a threat or an opportunity to rewire. And it raises fundamental questions. Can regulation ever keep pace with innovation? Can local solutions prevent global contagion? And how much stress can a financial system really take before it snaps? We're about to find out what happens when these two minds turn toward each other and begin to challenge the assumptions behind each other's arguments. Let's return now to Dr. Krause, who will respond directly to Dr. Takahashi's case. Dr. Krause, what are your thoughts?
Dr. Takahashi presents important cases of resilience, but they are statistical exceptions, not scalable solutions. Iceland had an economy smaller than many US states. Its currency was flexible and devaluation-friendly. Try that in the Eurozone, where Greece and Italy are bound by a shared currency and constrained monetary policy. Let me add, the size and speed of modern financial contagion exceeds historical precedent. In 2022, the near default of Credit Suisse in Zurich triggered emergency talks within 48 hours, causing bond spreads to spike from Tokyo to Toronto. The reason we didn't see collapse wasn't resilience. It was immediate emergency intervention. This isn't sustainable. Central banks are already overstretched. According to a 2023 Bundesbank internal audit, the ECB's bond holdings reached 38% of eligible Eurozone sovereign debt. That means its ability to absorb the next shock is diminished. As for fintech oversight, yes, Busan's program is promising. But systemic risk isn't in Busan. It's in London, New York, and Hong Kong. A decentralized tech solution doesn't scale fast enough to stop a synchronized liquidity crunch. So yes, there are patches of innovation, but they're no match for a globally synchronized unraveling of trust, liquidity, and credit.
And now, Dr. Takahashi, your response.
I appreciate Dr. Krause's macro-level caution, but I believe his framing of the problem remains top-down and therefore incomplete. Let me give you a different lens. Bottom-up economic behavior. In Greece post-2015, following the third bailout and massive capital controls, thousands of citizens shifted to informal peer-to-peer exchange networks, barter markets, and local currencies like the TEM in Volos. A 2019 study by the Hellenic Foundation for European and Foreign Policy found that these systems sustained up to 15% of local economic activity in the absence of functional banking. Why does this matter? Because it shows that collapse is never total. People adapt. Systems find redundancy. The 2020 COVID-19 contraction was supposed to be the next Great Depression. Instead, we saw historic resilience. According to the IMF's 2021 report, global recovery was 4 times faster than the 2008 crisis, thanks to decentralized fiscal interventions, not just top-down central banking. The future of finance is hybrid, a layered system of formal regulation, local adaptation, and technological mediation. Collapse thinking blinds us to the actual forms of distributed resilience emerging globally.
Closing remarks. Two powerful, grounded arguments on a question that touches the very foundation of modern life. Is the global financial system a fragile tower about to fall, or a shape-shifting organism that evolves with every shock? You decide. Until next time, stay critical, stay curious,